So how do you buy undervalued stocks? Well, the first step is to understand what it means to be undervalued. I'll explain that, do my normal market analysis, and look at the trade of the week on AHI. That's all coming up in this week's Stockscores Market Minutes. So what is an undervalued stock? Well, it's often based on an investor's perception of fundamental value relative to the stock's price. So someone might do some analysis, look at the earnings, look at the growth, look at the debt, all of those fundamental factors, and determine that the stock is worth $100 a share. If it's trading at $70 a share, then it's deemed to be undervalued. The problem with that approach is, what if that analyst, that investor, is missing some key information, perhaps something that isn't widely known yet, the things that are not yet in the news releases or in the financial statements. You see, the market tends to price in new information about a company's fundamentals before that information is often made public. And so the problem I have with using publicly available information to make a decision on fundamental value is that it is easy to miss something because public information is already priced in, but stocks will tend to move on private information, things that are not yet widely known. So to me, the best way to buy an undervalued stock is to look for stocks that are more likely to go higher than lower in the future. Isn't that what we really care about? If we buy a stock at 20, we want to sell it at something more than 20. Undervalued simply means it has a good potential to go up in the future. So that then makes the question, how do you find stocks that are likely to go up in the future? And I want to take an approach as an investor, as a longer term investor, not someone who's day trading or even swing trading. Because in those short-term time frames, it's not really about fundamentals. It's about psychology and supply and demand and those sorts of things. So if we're looking for those long-term buys, things we're going to hold for months or even years, we need to take a look at a long-term chart. I like to look at the 3-year weekly chart. And a very simple formula that I have found effective to find stocks that are more likely to go higher than lower in the future is if they are breaking through resistance from a rising bottom. And all you need for that is a stock chart, a ruler, and a pencil. And I'll show you how to do this in just a moment using some examples of stocks that have done well in the last little while. And they all gave us this signal. They broke a line of resistance from a rising bottom. So let's look at some examples of that. So here is Microsoft, and there's a few examples on this chart. We'll start with the one that is most recent. You can see here there was this downward trend line, and it was broken right in here. That was in February, late January. This bottom is higher than the previous bottom. So that was the turning point. Now if we go back even farther, you can see there was a line of resistance here that was broken from a bottom that was higher than the previous bottom. Now, I'm not interested in buying them when they're far in the upward trend. I don't want to buy here. I don't want to buy here because it's too risky. Same thing with this stock now. I'm not interested in buying it now because it's already gone up a lot. It's priced in whatever fundamental value motivated investors to buy it back when it first started to move. So we always want to buy that first break of resistance from a rising bottom. And we can define resistance with a downward trend line like that. And then we can say, okay, there's a break of the downward trend line here, but no rising bottom. So that doesn't work. And then we can draw another trend line like this across this top. And we can see a breakout through resistance from a rising bottom. And it's been edging up ever since. It also did it back here. Long-term resistance, breakout from a rising bottom, and the stock went up for a shorter time period, but it still went up over the next 2.5 months. One more example. Here's a Canadian stock that did really poorly in late 2021 and into 2022, but has actually been doing not too bad the last few months. Well, when did it start? Draw a line across these tops. You see the breakout. You look at the last low. There it is. Is that higher than the previous low? Yes, it is. So that met our criteria of a stock breaking through resistance, in this case horizontal resistance, but sometimes resistance is a downward trend line. But what's important is there's a breakthrough resistance from a rising bottom. It doesn't work 100% of the time, don't expect that, but it does work quite often. All right, let's get into this week's market analysis, figure out where the markets are likely to go in the next little while. Here's a chart of the S&P 500 60-minute chart. You can see here that the trend is up over the last 2 or 3 weeks, so the buyers are in control in the short term. What about the long-term 3-year weekly chart? Well, you can see that we broke a downward trend line from a rising bottom a few months ago, and it's taken a while, but we're now finally starting to gather that upward momentum, and I expect that to continue in the weeks ahead. So bullish market on the S&P. What about the Canadian market? T.xiu. Let's take a look at the 1-month 60-minute chart. Very different picture on the Canadian market. You've got a downward trend, and therefore it is a bearish market in the short term. Now the long-term chart isn't too bad because we've been stuck in this sideways range and we are building rising bottoms. But until we can break through resistance and start to move up toward those highs, I would say the Canadian market is likely to underperform the US market. Well, let's take a look at commodities now. Gold and oil are the two that I like to look at every week. And if we look at the 1-month chart, 60-minute of gold, who's in control? The sellers are in control of this market. The tops are falling until that cycle reverses and we start to build rising bottoms. Short-term caution for gold. On the 3-year chart, very different picture because here you have rising bottoms. Over the last month, we've pulled back to the trend line and we're now at the place where gold should bounce. But I don't yet see a sign that it is bouncing. So you want to watch that short-term chart for gold. If it can break up through the downward trend line in the short term, then perhaps it will bounce off of this trend line and move back towards resistance at those highs. So not a great chart for gold, but long term it's still hanging on by its fingernails. All right, let's take a look at oil, USO. And again, we'll go 1-month, 60-minute. Pretty neutral, been sideways for the last month. A little bit of extra volatility over the last week or two, and that shows some uncertainty, but we're not trending one way or the other. On the long-term chart, you can see that we have falling tops, and we're trying to make a rising bottom, but for that to matter, we need to break this downward trend line. Notice the sentiment stock score is 33. That's because the sellers are in control. Over the last 6 months, it's more or less been sideways. And so it's not a terrible market, but it's certainly not a strong one either. Let's take a look at some of the currencies. The US dollar, 1 month, was bullish in the last few weeks. It's kind of lost its momentum. 3-year chart, sort of stuck in this sideways range. Looks pretty neutral to me. Bitcoin, popular thing for people to want to monitor, and it doesn't look good, folks. In the short term, the tops are falling. That means the sellers are in control. We do not have any rising bottoms, and therefore negative in the short term. On the 3-year chart, this of course the weekly chart, you can see the upward trend line broken. It basically came up to this resistance level. It has got stuck. We'll see if it can break out from that, but for now I think you want to avoid Bitcoin. Finally, let's take a look at the bond market, TBT. This is an inverse ETF of the US Treasuries. Essentially, when it goes up, interest rates are going up. And so you can see that interest rates have stopped going up. They've been going sideways. A little bit of a rise perhaps in the last 4 or 5 weeks, but still stuck in this sideways range. So it doesn't look particularly bullish or bearish, just sort of a sideways market. On the 1-month chart, you can see a little bit of optimism, a little bit of rise in rates over the last month, but nothing that significant. So it seems like that factor for the market is starting to calm down. So let's take a look then at my ratings. US stocks bullish on both time frames. Canadian stocks long-term neutral, short-term bearish. Gold neutral in the long term and bearish in the short term. Oil neutral on both time frames. The same for the US dollar. Bitcoin, I'm keeping it at neutral in the long term, but bearish in the short term. And interest rates neutral on both time frames. All right, now we'll get into the day trade of the week. Of course, I like to day trade, and that's something that we offer people to watch my indicators, watch my analysis through the trading day. That's a service we call Active Live. You can learn more about that at Stockscores.com. And this week I will share with you probably the hottest stock of the week. It occurred on Friday. This was AHI, made a really massive run to the upside on Friday. Well, as you know, if you've been here before, we look for these little yellow dots. That's my own indicator. I call it an action candle. The pink dots are what we call a message candle. It represents abnormal price and abnormal volume activity. And when you get those abnormal breaks from the right kind of pattern, then that is a good buying opportunity. We have some real-time algorithms running on every US listed stock in real time on the 1 minute interval looking for these, and that's what Active Live is all about. Well, we had a few entry signals on AHI on Friday. The first was there at 10:31, and a big run from that one from $1 to $2 essentially. And then another one in the afternoon. There's another pink dot, yellow dot that's breaking a downward trend line from a rising bottom. Very similar to what we talked about at the top of the video when you are investing. Well, this pattern, you also see it when you're day trading, when you're swing trading. And so it's a very simple way to identify stocks that are reversing downward momentum and starting to move higher. And you can see here on AHI, it made a big rally from that signal, moving from around $1.60 to $3.20, so a double in an hour. And that is a pretty fantastic trade. So if you've enjoyed it this week, please click on the like button. It always helps the number of views for the video, and I appreciate that if you would do that. Subscribe to the channel, turn on your alerts alarm so that you get an alert when I upload a new video. And next week, of course, as always, trade well.